Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Juana.
Okay, so we have new data that shows the housing market is rebounding nationally.
So if you like data, please subscribe, hit the notification bell, like the video, share the video, and leave us a comment. Tell us where you're watching from, and comment on the data.
Okay, so when you do comment, just tell us where you're from so we know where everybody's watching from. So we're going to start with, we've got a series of quotes from articles, and then we've got these very cool charts that show almost an incredible turnaround in the housing market, literally that we called it, that I think the housing market watches our videos and knows it was time to turn around. So it like literally turned around.
Modesty is strong with this one.
Very much modesty here. Okay, we're going to start with the first one. So we all know that inflation, mortgage rates, and recession are really the kind of three drivers to the economy right now. So a recession is looking more and more likely, but with inflation clearly trending down and mortgage rates approaching 6%, we're seeing upward inflection points in many housing market data series. So the last numbers were, there was a 65% chance of a recession. Mm-hmm. A year ago was a 100% chance. And then also that 65% chance is 2 quarters, and then that's it. But everyone's pretty much expecting like year-over-year growth.
Right. This is kind of like a rebound thing, and think of like somebody rebounding from a relationship. Could be good, could be not so good, but we think it's good.
Yeah, and then the thing we don't know too is how much of this is the normal seasonal thing, because this happens every year in the housing market. Okay, but it's coming from a low, so it's sort of a bigger jump.
Right. So look, the rebound is real. Whether it's real long term or not is left to be determined. Like Todd said, it is seasonal, so we were expecting it anyway. Whether this is going to have legs or not, we'll see.
Okay, the next one is talking about rent price growth. It continues to decelerate, so the growth of rents are still growing but decelerating. It's 7.5% year over year in December, which means if you paid, $2,000, it's up 7.5%.
Right.
But so it's up like $150.
Right. So, but remember, these are national numbers, so it may be different in your local market.
Yeah, that's the slowest growth since May 21. In cities like Phoenix and Vegas, rent growth slowed even more dramatically. Mm-hmm. Basically, let's talk anecdotally. Have you seen? I know that we've done a lot of rent increases. Mm-hmm. Have we seen it pretty much? Like, are there a ton of rentals out there, like open, available? It doesn't seem like there are.
No. So I've done 3 rent increases in the last less than 30 days.
Okay.
And, I do pull comps, and I looked, and in each case there was like 1 or 2 in the community, and that was it. So there really are not a lot of rentals available on the market, but it's kind of at the time of year too. We tend to see more rentals become available in the spring because, we've talked about this a lot. That's when properties tend to turn, whether you're buying or whether you're renting. So this time of year, there's not a lot of turn.
Okay, but people aren't balking, saying, "Oh my gosh, no, I'm going to go down the street and get a cheaper house."
Not at all. I have not. I've had people thank me for the rent increase because they were expecting more.
Wow. Okay. The next one, this is very interesting. Mortgage Bankers Association reported mortgage applications rose 28% week over week. That means just from one week to the next. It's only 1 week, and it was flattered by the New Year's It's just flattered by the New Year's holiday. But that's still larger. I think they meant flattened. But that's still a big increase. How does that, what is that? If people are applying for mortgages, what does that mean?
It means that they're buying a house. And generally, people are not necessarily very proactive, so they tend to apply for a mortgage once they already have an accepted offer. Not the ideal way to do it, but that is what people generally do. So that means that they've got houses under contract. So those numbers are probably going to start looking different as far as inventory too. I think we still don't have a lot of sellers bringing properties to market. So with so many people applying for mortgages, that led us to believe that either they've got a house under contract or they're looking for a house, and they will be absorbing what inventory there is. So we're going to go into spring with probably lower inventory levels than we would like.
Yeah, and we checked the numbers. We're not going to do a video on it, but only the city of Las Vegas, the amount of inventory went from 5,700 houses on the market to 3,900 in the last 2 months. And it's a downward trend, meaning the velocity showing that the number of homes are going to decrease. And another market that we watch, was cut in half. Half of the homes that were basically in a price range, which is like affordable price, not luxury homes, affordable price range, is halved. And this is from 2 months ago to today. And it looks like a lot of these markets, we're going to be back to the spring where there's literally no inventory.
Right. So no inventory, supply, demand, buyers chasing fewer homes means what? Multiple offers.
Multiple offers. Okay,
Multiple offers means higher sale prices, because if you have multiple offers on a property, people are bidding up. And obviously, generally speaking, the highest offer wins.
And this is nationally. Things can happen in different markets. But what's driving this is this chart here, the average 30 fixed rate mortgage. So October 20th was the peak, 7.37%. Now you probably see different numbers. Some of these were what rates that are offered and some were rates that are locked in, and they keep two different numbers. So, but this is Mortgage Daily News. And then the other thing is these rates are with no points. What's incredible is that we're down to 6.05%. We haven't been under 6% in quite a while. And if we it looks like that if the 10-year keeps going down, that we're going to be under 5 here probably within a week or two.
Wow.
And that's going to drive a lot more.
You mean under 6.
I mean under 6. It's going to be in the 5s. So that's going to drive a lot more people like going out to purchase. But the problem is, we need more inventory. We don't have it.
Right. So if you're thinking of selling your house, give us a call. Contribute to the need. There is a need for inventory. Contribute to the need.
We did a video about a year ago where we talked when the interest rates started going up and said that historically, interest rate increases never lasted ever more than 18 months. They went up when the Fed raised rates because of inflation. Interest rates went up for 18 months max. And I think this year we got 11 months of increases. And it looks like we're beyond. Now, it doesn't mean it couldn't go up. Inflation could start churning again. But right now, it looks like we kind of are past the worst of it. So we're kind of in rebound mode.
Okay.
The next thing is this other slide. This is the housing market index. Now, the index is a number between 0 and 100. And 50 is like normal. Everything above 50 it's moving, and everything below 50 is not that great. It's like less than average or less than normal, right?
Right. So, but 35 is not a bad number right now when you consider where we were.
Yeah. So the bottom, we were at 31, and that was in December. January, it jumped up to 35. But what's really incredible, what I like about this slide is a couple things. They have it broken into two different categories if you look at the bottom. One is they have it by region. So they have the Midwest, West, South, and Northeast. Now, what's surprising is the Northeast and Midwest are kind of not great. The West is the worst, but the South is the best. But remember, the South is misleading because it includes everything south of like North Carolina. And those, as you're going to see on the next slide, those are actually potentially still hot markets. So even though the South as a whole is 39, there's markets within the South that are probably way above 50 that are going to be hot markets this year, which is counterintuitive because the housing market was supposed to crash, and it's been pummeled a bit. Prices are down, I think 9.5% in Vegas. But it also breaks this other thing. If you look at that bottom right, it breaks it into current sales, future sale expectation, and buyer traffic. What's weird is that future sale expectation is only 37, but current sales is 40, but it's flipped around on the other thing because we're seeing more people apply. So this will be interesting. Buyer traffic's 23, but that buyer traffic's for new homes. And remember, there's less. Why are there less new homes out there?
Well, there are less new homes because builders put the brakes a year ago. And so they've been building less because they've been building less. There's less inventory available for purchasers out there. Kind of anecdotally, I spoke with a broker the other day, and he was saying that he's had more calls in the last 30 days from potential buyers than he did in the previous 6 months combined.
Yeah, we're actually, I can agree to that.
Yeah, so they're very interesting. So I think buyers are back, and I think that the inventory needs to come back to keep pace with these buyers. I was looking at some of the listings that expired. They expired in the late fall, right before Christmas maybe. They came back on the market, within the last couple of weeks, and a lot of them are getting snapped up because buyers are back. Okay,
but here's the interesting thing. The conventional wisdom was that people would list their house have to have massive price drops and eventually just give in to the buyers who are going to lowball, and that would crash the market.
So I have not seen that. So these sellers who are coming back to market that expired, before Christmas, are coming back with the same price or even an increased price than they had before Christmas.
I'm seeing a lot of listings come back in the MLS at a higher price than what they took them off in October.
That's what I'm saying. And not only are they coming back, but they're getting accepted offers relatively quickly. So like I said, I think buyers are back. I think we need sellers to come back and play. So if you're thinking of selling, like I said, give us a call.
Give us a call anywhere in the country. We can find you an agent with Referral Cloud. Okay, this is the last slide, and then we'll do a summary and wrap it up. This is the hottest property markets for 2023. Now, these are 3 sources: NAR, Zillow, and Realtor.com. So everyone has their own data and they have their own reasoning for what they think will be a hot market. But what's interesting is they literally don't agree. The only exceptions in here is Dallas shows up on 2 of them, is 3 and 4, and then Atlanta is 1 and 8. But then Realtor.com has a whole bunch of like really random places that aren't, like Connecticut and Kentucky. And then you have some Pennsylvania's for Zillow. And if you look at NAR, pretty much every single one of NAR's is the South. Remember what I said the South was? It's North Carolina. Basically, it's North Carolina South all the way over to Texas is what's considered the South. And we did a video. Remember the video we did where we talked about all the areas where the iBuyers were buying?
Right.
And they were really blowing up southern states.
Yes.
And why was that? What were some of the fundamental demographic reasons why the South is doing so well?
So the South is doing well because, first of all, their price points are lower, so that means that they can purchase more properties for the same amount of money.
Okay.
The South is growing as far as they're having an influx of population, and that's one of the metrics that the iBuyers are looking for. So all these things point to a market that is on the upswing as far as appreciation, as far as rent values, all the things that make these iBuyers want to purchase there. The thing that when I saw this chart with the 3 different data providers, I just kind of burst out laughing, saying, there are liars, there are damn liars, and there are statisticians.
And there's the Zestimate. You got to add the Zestimate. Because I've seen on a property that's worth $500,000, $550,000, I have seen the Redfin and Zillow $100,000 different. Which is it? That's pretty. I mean, to be off by 100,000. Well,
to me, it's not the dollar amount that they're off. To me, it's the percentage that they're off. That's pretty telling. If you're off by 20%, obviously the truth is probably somewhere in the middle.
Right.
But it's probably not the most accurate way to price your home. Not that I'm, pitching in as far as for realtors, but realtors tend to have a better idea of what a property is worth because they work with sellers, they work with buyers, and they're out there every day. They actually see the inside of all these houses. They're much more familiar with neighborhoods and what's coming, what's going, what buyers are looking for, what buyers are attracted to versus what buyers pass on. So that's part of what goes into a realtor's estimate as far as what the sale price might be.
The other thing too about iBuyers is that Open Door has not gone away. Mm-hmm. They're still buying. They're just not buying in certain markets, the markets they got crushed in. Las Vegas is one of the markets that they got crushed in. Almost every house that was purchased here is on the market for much less than they acquired it for, not counting. And I went in 2 of them to check them out over the weekend, and they were super nice.
Yeah.
These houses were, when you walked in one of the houses it wasn't brand new. It was 18 or 19 years old. But when you walked in, you would have thought it was new construction, mm-hmm. New carpet, new paint, all the appliances were new, the fixtures and everything. It looked like they had completely remodeled it, and it was on the market for about $40,000 less. But that doesn't count thing. And then another one I looked at was $61,000 less, mm-hmm. and it was a newer thing, so it didn't really need to be. It was only 2 or 3 years old, mm-hmm. so it looked like it. They didn't do anything to it except for maybe just paint it. Mm-hmm. But they're still around. The hedge funds are still around. Mm-hmm. They're not going anywhere. they're still going to be buying in the lower price ranges. So Juana, let's sort of do our looking forward.
Okay.
Looking forward, inventory is likely to decline.
Yes.
Okay. It will probably flip again like it does every year in the, summer?
Yeah. I mean, look, what's going to happen is even if lots of sellers come on the market in the spring, their properties will get snapped up by eager buyers. So inventories, I don't think inventory is going to climb substantially in the spring, and certainly it'll get absorbed at a relatively rapid rate. And then the people that are late to the party, or the people that are wallflowers as far as their houses are concerned, those people are going to take longer to sell their homes, and they'll go through the summer. And then as homes keep coming on the market, they will take longer and longer to sell as we get into summer, fall, and winter, and then we start all over again next year.
Yeah. So anecdotally, I had somebody contact me and say, hey, I'm interested in these 6 houses. And of course, we have a buyer agent that works with us. So I looked at the houses, and 2 of them were already, one was withdrawn because I guess potentially the seller didn't just said, I'm just going to hold off and not sell it, right? Mm-hmm. And then the other one had gone under contract. Mm-hmm. So there's still, and this was literally within a day of this all happening, mm-hmm. that these happened. There's still probably some deals right now. Mm-hmm. We had said in the spring that October, November, December, January would be the 4 months with opportunity because prices would be down, there would be less competition. Mm-hmm. And it looks like sometime later this month, sometime in February, we're going to sort of pivot back to this. Interest rates drop below 6.1. Is that psychological? If we get to 5 something,
it really is. I think, well, 2 things. One, I think part of it's psychological, and I think part of it is that it's going to take not quite as much money to get to a more palatable interest rate if you're buying down your rate, or if the seller is contributing to buy down your rate. I'm still seeing sellers that are willing to pay for rate buy downs for buyers, okay, in order to move their properties. So there's still an opportunity out there, but I think that window of opportunity might be closing relatively quickly.
Last piece of anecdotal information, and I'll let you wrap it up. Mm-hmm. We all know there have been some new home builders who have had some big price drops. Mm-hmm. A lot of them have stopped doing that. Instead, what they're doing is they're saying, I don't want to change the price. What I'll do is I'll drop $30,000 on a massive rate buy down. And most people don't realize you can put in, $5,000 and get, a quarter point or whatever knocked out, but you can get a substantially lower rate with $30,000 if the builder's willing to drop it, because they don't want to drop either way they can write it off, but they don't want to punish the people who've already bought by showing a sale at a lower price. Right. And then they also, if they're still building the subdivision, that hurts them when they go to sell the next unit. People will be like, oh, but you sold that one for $550. Why is this one $600?
Well, the other thing is that the appraisal value matters, right?
Yeah.
So if the property sells for less, then when an appraiser goes in to appraise the next property, then they'll appraise it lower than it's priced at, because there was a lower comparable that just sold for less money. So that is a concern for builders and for sellers in general. So that's one of the reasons why sellers and builders would rather do a concession than a price reduction on the sale price. Now, if you're purchasing cash, you can still take advantage of it because, okay, they're not going to buy down your rate, but you can still use that money for other things. You can use it for finishes, you can use it for lot premiums, and of course, at the end of the day, you can still use it usually to lower the purchase price of the house.
Talk about your prediction for the next 4 months, what the market looks like for average people buying and selling, and you can wrap it up.
Okay. So if you're thinking of selling, it's interesting because I just had a chat with a seller yesterday. Yesterday I had a chat with a seller, and what I said to her was, look, you right now you have a little bit of time. Take the next 30 days to get the house ready, get your handyman in there to go ahead and take care of the things that you need to get taken care of, like, if there's a faucet that's dripping, or maybe you need your air filters changed, or you need the irrigation fixed, or whatever it is that you need fixed, get those things taken care of, clean up the house, maybe a little bit of touch-up paint here and there, and just get it ready to sell. And then come the middle of February, let's go ahead and put it on the market, because then you're going to be catching the front end of the selling season, and you'll get probably a good bit of money for the house. Now, are you going to get what the top dollar for the house was last year? Maybe, maybe not. But you will certainly get fair market value for the house, which is not a small amount of money, and it is definitely on the upswing. If we play our cards right, maybe we'll get multiple offers, and maybe we will get, beaucoup money for it.
Year over year, we're actually still up from 2021, January to January, and nobody would have said, the market crashers all said we would be down 40, 50% already, and we're not. No one would have expected this was going to happen, and certainly a lot of people would not have said that we potentially be going into like this bounce back up where inventory is so low. I think everyone expected a ton of inventory.
Well, and the market crashers do it for clicks. So
yeah. If you look at their videos, I'm just like, I see 300,000 clicks after like 5 days, and I'm like, oh, well, they just bought a car, from telling people the market was going to crash. And they put that video out like twice a day.
Well, and
they do every market is going to crash.
And that's great. And that's just, market crash porn. So that's fine.
Okay.
As far as buyers are concerned, if you're interested in buying a house, you can have less choice now, but less competition now too. So this might be a better time for you to consider purchasing. A lot of mortgage companies are offering you free refinance if you refinance within a certain amount of time, if rates drop. So that might be a consideration rather than waiting for rates to drop. I'm not saying this is a great time to buy a house, but I'm saying if you're buying a house anyway, this might be a better time as far as not having so much competition, but you're still going to have less choice than you will down the road. But down the road, you will have more choice and more competition. So it kind of depends on what you value most. But at the end of the day, it's about buying the right house in the right place for the right price that fits your needs the best. So I don't know how much difference that makes.
You can't time the housing market.
Can't time the housing market.
You can't even time the stock market.
No.
You can't time anything, so don't try to do it.
Can't even time the right time to have kids.
Right.
So, the best we can do is live our lives. So if you like the video, please subscribe, hit the notification bell, like the video, share the video. Leave us a comment. Tell us where you're watching from. Tell us what you liked about it. We value your input, even if it doesn't agree with us. Please be nice to each other in the comments, and we'll see you on the next video. Bye.
Bye.